All right, Pepple, put your headphones on. Hello, YouTube.
Right.
All right, and here we are, Business Express, gone past 6:30 for a holiday Monday morning, at least in Nigeria, Rotus. So Rotus is in the studio with us, Shokwa Martins.
And Pepple.
Yes. Good morning, Rotus. How you
Good morning,
doing?
Rotus.
Good morning to you folks. Good morning. Happy Easter Monday. Good morning to all our listeners as well. Good to be with you guys. Start the week.
All right. Let's get straight into it. On WhatsApp, you can be part of the show on WhatsApp 0809 444 0981.
You can also actually join us on YouTube because we are streaming live on youtube.com/smooth981FM Lagos. Make sure you leave your comments up on the live stream and leave your comments via WhatsApp as well to join the conversation and have your say. All right, so Rotus, what is up for us for the next 15 minutes? What will we be talking about?
We're talking about an interview that Shubham Chuduri held with the Punch newspaper, and he's from the World Bank. He was talking about Nigeria's policy independence as well as a number of economic issues around the country, and also some observations I just made around the South African rand and how it has strengthened over the past 6 weeks since the war in Ukraine started, and the reasons behind it, and I guess parallels with Nigeria. So that's pretty much what will be. And then inflation that was released, inflation figures that were released on Friday for Nigeria. That's what we'll be jumping into.
All right, let's get started then.
Yeah, so Shubham Chuduri is the country director for Nigeria for the World Bank. And in an interview that he had with the Punch newspaper, he was basically saying that in terms of fuel subsidies, Nigeria has policy independence, and the World Bank cannot dictate policy to Nigeria. If Nigeria wants to remove fuel subsidies, well, that's up to Nigeria. If Nigeria doesn't want to remove them, that's up to the country. All the World Bank can do is basically advise, just give advice to Nigeria. And if Nigeria wants to take it, she can. If she doesn't, she's well within her rights not to take any of the World Bank's advice. President Buhari wrote a letter to the legislature stating that more money needs to be applied to fuel subsidies. It was 442 billion naira that was initially allocated for subsidies. An additional 3.5 trillion has now been requested. So in total, you're looking at about 4 trillion naira in fuel subsidies, or rather 4 trillion naira in an allocation for fuel subsidies for 2022. It's a staggering amount of money. And the World Bank has consistently said that essentially that kind of money can go elsewhere. They've seen this song over and over and over again. But the federal government, which initially said it would end subsidies in July of this year.
Yeah, because they'd only planned for the first half of the year, hadn't they?
Exactly. So that's basically what Mr. Chuduri has been saying, essentially, with respect to Nigeria's policy independence.
All right. Now, what other points did he touch on in his interview?
So he talked about the infrastructure deficits. He talked about Nigeria's potentials as being a top 10 economy, a successful economy. He said the potential in the country is huge. It's just that, who is going to take the steps to realize the country's potential? And I've said this as well, that if Nigeria has 24/7 power and you reduce corruption and so on, you are looking at an economy that's easily, top 5 in the world, or at least top 10, And so he touched on that. He also
oh my goodness, very interesting. That would actually be amazing.
Yeah, I know, right?
Oh.
Everything was just to fall into place. It's one of those things that just it hurts to think about. He also touched on debt. He gave a very interesting analogy with Nigeria's debt situation, where he said, I think he was asked about borrowing, and he said, well, if you think about a family that loses its breadwinner, If they borrow money to continue to pay for their child who is in university, that is good debt, because that debt is being invested in a future breadwinner for the household. But if you borrow money just for people to go to nightclubs to go and enjoy themselves, then that's bad borrowing. And he essentially was making that that example to talk about how we're still borrowing to pay salaries and not really borrowing to invest in the future of the country. So those are some other points.
That's actually a pretty fantastic analogy because it's just put the information across so concisely.
Exactly. And so look, the reason why they talked about borrowing is because that 4 trillion naira for subsidies is not going to come from the sky. It has to be borrowed, which is just going to put more headache on whichever administration comes in 2023.
All right. So, Rotus, is he right about not being able to dictate policy to Nigeria?
He is. I mean, Nigeria is an independent country. The World Bank, the IMF, the African Development Bank, all the institutions in the world, they can write all the policy advice and they can give all the advice they want to. Nigeria is well within her rights to ignore the advice if she feels she's acting in the best interests of her citizens. And according to President Buhari's logic, by subsidizing fuel, he is helping the average citizen by not increasing price pressures on them. So they are correct. Nigeria doesn't have to listen to anybody to do what she wants.
But are there consequences for not listening to any of them?
There are. And look, I mean, we'll get to inflation in a moment. Is any Nigerian protected from price increases? Look at the price of, I mean, take your pick. What are we being protected from with PMS being where it is? It is richer people, middle class, upper middle class people that own vehicles and, other and larger gens and so on. They're the ones who are benefiting from this subsidy. It's not benefiting the poor that President Buhari thought he was benefiting.
All right. So I know you've already touched on President Buhari saying that it's not going to help people's quality of life as of right now. But really, why hasn't Nigeria listened to the World Bank on subsidies?
Nigeria hasn't listened because the World Bank is asking for the country to make some very tough decisions. And it's decisions that other countries have also made in the past. If you reduce those subsidies, if you remove those subsidies, there will be a price increase. And that price increase is going to filter from fuel into other commodities.
Into everything, right?
Yeah. 99 or 98% of goods pass through roads here. So pure water, bread, take your pick. You'll just see a spike.
Well, Rotus, you said that we're going to touch on inflation later because what I would say is we've already seen a spike when it comes to everything, including pure water.
And we've noticed the latest figures. So go ahead, talk about it.
Yeah, so 15.92% is where we are for March year on year. It jumped from 15.7 in February. Food inflation is up. The issue with the diesel, we're starting to see the diesel issues filter into inflation figures. And food prices, of course, also rising as well. So the numbers, it's the highest inflation figure so far this year. I mean, it was still not as high as it was 18% in March of last year, but it's high. I mean, we've been in double digits for quite a while. So food prices, fuel, and so on and so forth. So
what do those figures mean for the average Nigerian?
Disposable income is squeezed. Your naira buys less this year than it did last year, and anybody can attest to that. Gari, rice, bread. Look at what's happening with diesel. It's squeezing the average Nigerian. They're not able to afford as much as they did last year. Can't save as much. It's real pressure. Exchange rate pressure as well. The dollar now on the parallel market is at 5.92. That is what some parallel markets so it keeps climbing, so between 5.88 5.92. So it just keeps going up.
But you know what, as a budding capitalist, what does it mean for the investors? That's my question. So
for an investor, your real rate of return is not good. Essentially, if you are earning anything less than 15.92% on your return on investment, whether it's a savings account, whether it is a treasury bill, whether it is bonds, you're in the negative. because you have to do is whatever you're earning, you would have to subtract 15.92% from it to get your real rate of return. So it's in the negative, earning above 15.92%. So it's tough for investors.
Wow. Now we've got we've got a number of messages in from Benga comments. So let's get into it, because Benga says, so the 4 trillion naira subsidies that's going to affect our economy adversely. So the World Bank doesn't attach conditions to lending money again. On the subsidies, I believe that Buhari and elections that are standing against, is Buhari and the elections that are standing against subsidy removal. I do pity anyone that will take over from him. He goes on to say that in the 80s, what we heard were the conditionalities attached to loans that Nigeria wanted to obtain. So are they no longer there? And he goes on to say, so a man who buys subsidized fuel for his generator is not benefiting from subsidies. I mean, some people buy fuel of 2 liters and it counts as well.
Yeah,
So
but it's in the consumption. It's those poorer people do not consume as much as somebody who has 3 or 4 cars, or 3 or 4 generators. It's a tax cut for wealthier people. That's who it disproportionately benefits wealthier people. So, and if you look at where prices are, we're not being protected from price rises. So it hasn't worked. The World Bank gives concessionary loans at very low interest rates with little conditions. It's the IMF who, if you're trying, like when Egypt took a $12 billion loan from the IMF back in 2011 or 2012, there were some serious conditions that were attached to it. They had to remove subsidies. They had to do a number of serious things. So if Nigeria ever in trouble and needs serious money from the IMF, she'll probably have to be forced to do this. But until then, she's just going to keep borrowing from the capital markets, getting concessionary loans, and just keep chugging along, essentially.
Oh, nobody likes to go to the IMF. Those conditions are brutal. I mean, South Korea is still like a nightmare for them. They're like, oh my God, why did we go? But now you said that we're going to talk a little bit about the rand. So I'd love to know a little bit more of information. So let's quickly touch on what happened with the movement of the rand since the Ukraine war.
Very quickly. The South African rand has strengthened since the Ukrainian war. It's gone from about 6 per dollar to about 14 or 14.5. And very quickly, one of the reasons why is that since lockdown restrictions have been eased in South Africa, you've seen more economic activity. More economic activity has increased demand for the rand. You're also seeing tourism picking up. More people, the average person in Africa went to vacation around Africa, they'll mention Cape Town or Johannesburg or one of those places. So the more foreigners you've seen going into Cape Town, Johannesburg, they're demanding the rand, which is strengthening it. Commodity prices have also risen. They depend very heavily on their mining sector, which I think is a double digits contribution to GDP. Palladium, and other things. So mining, tourism, reduction in restrictions, that has actually seen the South African rand gain against the dollar. And when you have a stronger currency, it absorbs shocks for you, and so you're able to, you have more powerful purchasing power. That's what we've seen with South Africa.
Impressive. All right, we've come to the end of the show, but not the end of the conversation, because you can continue it up on Twitter with Rotus. He is at Rotankwood on Twitter. And you know what? Tag us in. We're at Smooth981FM. Well, Rotus, it's been really interesting, actually, talking about what's been going on. And we'll see you again this time tomorrow. All right.
Thank you guys so much. Thank you both.
Goodbye.
Thank you.
And that is that for Business Express. Coming up, it is going to